Jatin Parmar of Forum Capital is joining us to discuss more on the market road ahead and how they are navigating in an otherwise quite volatile year of 2022. In fact, Jitin, I would like to start with our conversation with your commentary, which I remember you and I were having this conversation on Swadesh, last time round, and you did kind of indicate that your stance was defensive or very calibrated and calculated on what spaces to bet on, as 2022 will be challenging. It was, quite challenging, I would say, and one of the longest corrections which have lasted so far from October till now. Are we out of the woods or not quite? How are you analyzing valuations, etc.?
Yeah, so good afternoon. Good to be back on 80 Now. This interview, I think we did on 80 Now Swadesh, if I remember correctly, I think in December. So, yes, we expected a challenging market for 2022. And the good thing is that, a lot of valuations, the high valuations in many stocks and sectors have come down. So, the market is looking far more attractive. But at the same time, the reasons are still there. You should not expect a runaway rally or a easy ride. One needs to be very careful of what they are picking. And as I mentioned, valuations are supportive in many sectors and stocks. So one should be extremely picky about the stocks and sectors one picks.
Understanding your thoughts on cyclicals. If you look at the commodity prices, they are down 15-20%, at least the industrial commodities. And even for that matter, back home, many of the stocks down quite sharply. I mean, 1400 plus Tata Steel made a low of 980. So what is the bet on pure cyclical industrial metals? Because this is a fact that the profitability trajectory of these stocks continue to be very strong. However, global prices may take time to scale back the previous recent peaks. How are you looking at this space?
Yeah, so again, the prices which we have seen and the margins we have seen in the last few quarters, I think they were abnormal margins, 38,000 per ton kind of margins are very, very difficult to sustain if you study past cycles also. They can come for short periods, but for them to last is very difficult. The good thing which has happened in the metal sector is, a lot of deleveraging has happened. A lot of these companies are, financially much more, prudent now, and not a lot of capex was announced even during the good times. So yes, correction has happened. One might be selectively look at it, but at the same time, one needs to keep a watch on China, because I think that's one country or producer which will decide which way it moves. But yes, a lot more confidence is coming into the metal sector right now, but one needs to be watchful. Valuations have corrected, and I think deleveraging has happened. So that's my take on it. I would rather bet more on the beneficiaries of this correction. We have the largest coverage of stocks under capital goods, manufacturing, infra. I think these are the companies which will benefit from this correction. So one should look at those names rather than maybe look at metals pure play. So that's the way we are going for it.
About the other cyclical, which is automobile. Look at Ashok Leyland, TVS Motors, M&M. All the three companies are at almost 4-year highs. The results are good. In fact, Maruti 2 weeks back announced a big capex, then did Tata Motors, and now today, even M&M has announced a big capex. I don't remember the last time auto companies announced big capex, but does it show that this sector is coming out and entering a growth cycle back?
Yes, so this sector had a very, very difficult time for last many years. Even pre-COVID, there was a slowdown, and there was a slowdown in India, and then there was a slowdown in Europe, and so on, US. So this sector, has taken it on the chin for quite a few years actually. So I think yes, it is definitely in for a rebound. Uh, One needs to be careful of the valuations because a lot of stocks have run up too. So we are typically, very focused on valuation. So we will be very careful in, picking up stocks at this point in time. There are some opportunities definitely, and we are looking at those. But we will be far more selective now that the run up, some of the run up has already happened. Yeah.
Jitin, how are you looking at your favorite unlocked trades? Hotel, is the juice over, or do you think they have some more road ahead?
Yeah, I mean, there the a couple of sectors which we have bet on from the unlock team last year. Hotels, paper, we remain positive. I think there's still quite a while to go, especially hotels. If you see, I mean, uh, I think domestically they are doing fantastically well. All hotels are booked. Of course, there is a vacation, but the booking and the rates are almost unprecedented, and we expect this sector to have much more, upcycle. Probably, I think we should look at it from at least a couple of years perspective. These look good. Even paper, we believe should do well. A lot of these companies, despite the raw material challenges, have done well, and you know, uh, despite plants running at full capacity, not a lot of capex has happened. So that makes us, basically positive on the cycle lasting for some while. Yeah.
Right. So, Jitin, what else are you reading and researching and busy on? Because you have a knack of getting into areas ahead of the curve. So, what interesting ahead of the curve work are you doing now?
So, couple of sectors which we have, basically initiated coverage on right now is financials and even pharma. We think that financials have had a pretty much good down cycle, and I think the worst might be over for that. So we are looking at uh, some stocks in the financial sector. In fact, we have already recommended a few stocks there. Pharma also. Selectively we are looking at it. We have started with one stock in pharma. We might look to add more. So these two sectors are something which are the latest entrants in our research coverage.
Right. Okay. So, in pharma, what do you like? Domestic formulation kind of business? Are you looking at beating down large companies which cater to the US market, but price erosion is a worry there? Or are you looking at MNC pharma?
So we are looking at primarily domestic pharma. Yeah. That's where we have most comfort. That's where I think we have, pricing power and so on. So yes, domestic pharma is what we're looking at.
Right. Jitin, we'll let you go on that one. Thanks so much for your time. Always great chatting up with you. That was Jatin
Thank you.
Parmar of Aurum Capital talking about the bets and the